Hello everyone, this is Jay and good morning. It's Friday, which is my favorite day. On Fridays I make my deposit, I review my portfolio to see what's undervalued and what am I gonna allocate that deposit into. And I also wanted to do some research on the stock. Ticker symbols ADM, which it has been down in the past couple of days. But I like some of the numbers that company has, which I wanted to review it very quickly. And another thing that I wanted to announce it was that I added my Visa position, which is right here at 0.4% of my portfolio. I posted the video last night. After this video, please don't forget to go see it if you haven't seen it yet. Hit the like button, subscribe if you're not subscribed to the channel. I really appreciate everyone's support. All right, so let's go right real quick into the stock analysis tab right here, which is Archer Daniels Midland Company, ticker symbol is ADM. In the past 5 days, is down 25%. Do you own this company? Are you buying some more of this company? Market cap for this company is $27 billion. Earnings per share 7.18. PE ratio 7.16. So they have a higher earnings per share than PE ratio. Look at that dividend yield, 3.5%. So 3.5% dividend yield right now. If you pick up any shares right now, that dividend is $1.80 a share per year. And let's go into the financials very quickly. The revenue, as you can see, it has been growing in the past couple of years, past couple of days. In 2020, it was at $64 billion, and it looks like from 2016 into 2020 was around $60 billion, and then it went up to $101 billion in 2022. As you can see, let's take a look at the shares outstanding. And they're not diluting the shareholders. They've been buying back shareholders. It looks like they ended up 2022 with 562 million shares from 2015 that they had 680 million shares. So that's some nice numbers right there. The free cash flow is the one that does not look like awesome, but they have some positive free cash flow right now. So, which is good. In 2021, they have very nice free cash flow of $5.4 billion. And then they went down in 2022 to $2.1 billion. So I need the 2023 numbers. Not sure why they don't have them here yet. They probably haven't announced them yet, but something that I would like to look into. Now, let's take a look at the balance sheet and let's take a look at the total debt. And it looks like in the past couple of years, they have been paying off debt. They have very low debt in 2014, 2015 at $5.8 billion. But then they got into a lot of debt in 2020 at $11 billion. But in 2022, they're down already to $10.2 billion. So that's some good signs right there. Let's take a look real quick at the dividends tab right here. As I've said before, 3.5% dividend yield. Annual dividend $1.80 a share per year. Payout ratio 25%. So it looks like there's a lot of room to grow that dividend right there, since they're only using 25% to pay out their dividend. Dividend growth is 12.50% in the last year. Wow, that looks really nice actually. A company that maybe you're looking into, please leave me your opinion in the comment section. I really appreciate it. I never followed that company, but I saw some little bit of undervaluation right there, so I wanted to show it right here. And of course, this is my portfolio right here. This is the spreadsheet that I use to keep track of my portfolio. Let me go to the left a little bit because it went too far to the right. So as you can see, in column B shows the name, but I'm gonna go to the right since all of you guys know these ticker symbols, I'm sure. And right here in column C, it shows the total shares that I own of each one. I'm really excited about this one, the Visa position, which is right here at the very bottom of $39.63. When I showed in the video yesterday, it was already going down to the $265, I think it was $266 post market yesterday after they announced earnings. So it looks like it's gonna start going down. So if it does go down to the 260s, I'm gonna buy some more, then I'm gonna use some of that cash that I have parked on the side. I already used $40, so I'll probably use like another $25 for it today if it does go down to the 260s, so I can continue bringing my costs down. I know I did buy it at all-time highs pretty much, which it was $271. That's my cost per share right now. I know I did, but I believe in this company long term. I'm planning on holding long term, and I am going to do the challenge, which is going to be a minimum of $5 weekly on Visa. So that's that. And then realty income has been on a dip as of lately. So I think I'm going to be buying a little bit more. I usually buy $5 of these companies, but I think I'm going to buy a little bit more of this one. It is right now, the share price is at $55.42. I really like this company. They have been paying their dividends very, very good consistently. And I do believe that the purchase for Spirit Realty Capital went through already, or they approved it. Let me see if it's in the news right here on the stock analysis tab. And let's go to overview. Realty Income closes merger with Spirit Realty Capital. Yeah, so it looks has closed on the previous. Oh, yep. So it looks like they closed on it on the deal already. They'll probably need some time to completely close the deal. And I think this deal right here is gonna add like another over 2,000 properties right there. They're gonna be taking on the debt, but the management for Realty Income has been doing very, very good for decades. So I do believe that this company will pull through anything right now, any high interest rates that are going on right now. Once they start going down, and the company will just continue to go up. Of course, this is just my opinion, not financial advice, guys. But I do want to continue to bring down my cost per share. I have stopped for some time or slowed down because it went above my cost, but I'm gonna continue to buy a little bit more, because once it goes above 60, I'll probably stop and focus on other positions, especially on that Visa position that I really want to grow it right there. Then Johnson & Johnson, it looks like he has been going down and up, down and up. It is right now at $159.56. So I'm definitely going to buy a little bit more of that one. I have over $800 invested in this company, and I'm in the negative by $3 only. I really like Johnson & Johnson, and I want to continue growing this position. My yield on cost right now is 2.97%, which I really, really like. And Main Street Capital has been doing very, very good for me. I'm up 19% on this company. I really, really like Main Street Capital, and especially their special dividends. My cost per share is at $38. I'm very happy with this position right now. The share price is at $45.58. If it goes back down into the 30s, I'll definitely be adding even more. As of right now, I'm just reinvesting the dividends, even though it is way above my cost right now. And I'm in the positive, but I really, really like that monthly company. I'm planning on holding very long term, and hopefully Main Street Capital with Realty Income will pay my bills in the future. That's one of the goals. This dividend portfolio is mainly for income. And right here, PFE, Pfizer, right now it closed yesterday at $27.47. It's under my cost. As you can see right here, my cost per share is $33.64. And I'm going to be buying some more. I've been buying pretty much like $5 to $10 on a weekly basis to continue to bring down my cost. As you can see, that yield on cost for me right now is at 4.99%. Probably today we'll bring it down to 5%, hopefully. That would be really nice. If you pick up any shares right now, you'll definitely be at over 5% yield on cost. So Pfizer is another one that I've been buying, and I'm going to continue buying. Vici is very close to my cost per share. My cost per share is at $30.17. I know I am in the positive by a little bit, so I'm going to buy a little bit more. I think I bought $5 last week. I'll probably do something similar this week. I really want to grow this real estate position right here. The share price was $30.52, so I'm gonna be buying some more of that one also. Starbucks also, I've been throwing like $5, $10 as of lately because it's in the low 90s. I'm gonna be doing the same thing this week. So this week I'm probably gonna do my regular $25 into SCHD and VYM, and then the rest of it is gonna go into these other positions. Because I really like where their prices are at, and I believe in these companies long term. So I want to continue growing them. I'm a DCA investor, so I really like my DCA strategy, and that's how I have been growing this portfolio right here. And hopefully it does very good in the years to come. I'm planning on holding these companies long term. Kenvue will be my last purchase. I've been doing $5 on a weekly basis. So I'll probably do another $5 if I have extra this week. If I don't buy, I think I'm okay. As of right now, the share price is at $20.75, so it's under my cost. I only have $200, over $260 invested in this company. I do like their yield right now, and my yield is actually at 3.47%. So my yield on cost. So I do believe in this company also. And I'm planning on holding long term. I think this company, the share price that it's at right now is going to be low in maybe 7 years from now. And then, of course, MPW has my portfolio down by a lot. I'm not very confident about the company. I think that they will come through. I don't think that they're going to crash completely and go out of business or anything like that. I do not believe so. I do believe that they will fix those issues with the tenants not paying rent pretty much. So which is, I do believe that every real estate company have those problems with tenants where they don't pay their rent and you know those kind of issues. So I do believe that MPW will come through and my portfolio will look better, but it's probably going to take some time. It's not going to be right now. But I'm a DCA investor. I like the buy and hold mentality. It has been working for other positions. So like Apple, Bank of America. Of course, MPW is not any of those companies, but it has been working. Bank of America was in the red a couple of times for me. And right now it is in the positive by 17%. Another one that I can say is Main Street Capital. I had it in the red a couple of times, and now I'm up 19%. Procter and Gamble, KO, Coca-Cola. I went down to like $52, I think it was. I was in the red. I was just buying and buying and buying, and look at it now. I'm up almost 3%. So I like to buy and hold. I do see that buying and hold long term does help. Because eventually some of these companies will go up. But also don't take this as financial advice, guys. Always do your research. The company can go down and can go bankrupt and you can lose the money. But I do believe in these companies right here for the long term. And I'm very, very excited about Visa, actually. So definitely excited about that one. All right, please let me know in the comment section, what are you buying this week? I really would like to know. I have a couple videos I want to do, especially I want to do a update on my growth portfolio. I want to talk a little bit about Tesla also. Are you buying the dip right now? I don't want to answer if I am buying the dip or not. I'm going to leave it for that video. And of course, I'm going to do my Sunday video giving my weekly update of this dividend portfolio. And I'm going to show you what I buy today. An exciting day today for me. So I'm going to be buying some more. And I'm excited to buy Visa at a lower price than it is right now. So I'm going to be a little bit bullish on Visa. So be aware of that. And all right, everyone, please don't forget to hit the like button, subscribe to the channel, and I'll see you on the next one. Thank you. Disclaimer, I am not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.